Hey YouTube, this is Zach with Achilles Financial, and we are back doing a stock analysis. What I have here on the screen is Zillow, the home buying service. They primarily specialize in agent revenue, as well as they recently started flipping homes. As you can see, they have had a tumultuous year over the past few months in particular, and I think that they are oversold. If you look at the 3-month graph, after they announced earnings for the Q4 of last year, December of last year, you saw that they had a huge spike. This was actually following an even larger spike, or I guess not a larger spike, but a big spike when they last announced earnings the quarter beforehand, going from Q4 or Q3 into Q4. You can see that just in a matter of days, they went from $33 a share to $37 a share, all the way eventually climbing here in February to $65 a share. So where do you think that the home buying industry is going? If we look over the past 3 months, there was a huge expectation that homes were going to devalue, that their model was broken, sold all the way down to $21.52 a share, maybe even lower during that intraday trading. They've now leveled out into $42.60 a share. So I think that what we're going to hear later this week is discussion surrounding what are next steps. The key here that we need to look for from their earnings report is their forward-looking guidance. Zillow has done a really good job of releasing a lot of financial information. They've been pushing information out. The CEO even came out and said that they had plenty of liquidity, and even under a worst case scenario that they still had billions. Not a little bit, but billions on the books. So they're still going to be okay. It's not worried right now. I think the actual number that they highlighted was over $1 billion in money still remaining under a worst case stress test scenario. And they also have a lot of homes that they're currently sitting on that if necessary they could probably keep liquid. And that's coming from the second way that they earn revenue, which is by flipping houses. The first is by those real estate agent fees that they utilize. So when we're looking just over the course of the past week at some of the buying patterns and then selling patterns, you can see that overall we're pretty much right where we started in terms of the beginning or the end of last week. So going into earnings, I think a lot of this has been priced in, if not oversold. So they are announcing earnings this week. I do want to highlight the reason for this analysis. We're looking for that earnings estimate here on May 7th. Now the past 2 quarters, they've beat expectations and they've done really, really well. So if that's the case and we anticipate them beating expectations, then what are we going to do? See that rise depending on the guidance. I think that this is a great long-term hold because this is the future of how people are going to buy their homes, is through Zillow, through Redfin, not necessarily through a realtor. So with that being said, again, we're already seeing that positive momentum. I think that this is going to be a continuation into earnings later this week. So that is coming on May 7th, as we just looked at. If that's the case, and if we see a positive environment going forward, this is going to continue to rise. Again, I understand that there's been a lot of volatility over Warren Buffett comments as well as China trade war comments, but it was not that far ago that they were trading $3 higher. So if we can just see that little bump up, I think that there is a play there. My one concern from an options is they have very expensive options, so you need to see a big move to see that price out. Even if you go to some of these longer term options, so if I go to November 20th, I mean, these are crazy premiums. It settles down a little bit farther out, but the problem is that farther out is $60 a share, which was their all-time high. And I think that the home buying expectations are going to continue to be low for the immediate future. However, depending on the interest rate environment and depending on how certain individuals come out of this, it may be time to go on a buying spree. People will be downsizing. Unfortunately, I anticipate there will also be some foreclosures of people unable to buy their or pay for their homes, at which point in time we'll see some more homes come on the market. Everything bodes itself well for someone like a Zillow who is positioned really well. So this quarter, look for the guidance. If you anticipate that this is going to be a downward play and you think that this is going to continue to go lower, I think the buy point here needs to be that $40 price point. So if we go through the month and you can see that they have been back under that $40 relatively quickly, I think that's the buy point. If you are bullish on this stock, I say get in when you can, because I think it's going to continue to go up. That's my opinion on Zillow stock. I'm a big fan of their stock. I've played it before, done really well, had minimal losses as well. Let me know in the comments below your thoughts on Zillow and if you're going to be making a play this week. Thanks. Talk to you guys later.